Hello and welcome to my channel. All of us would agree that effectively managing our personal finances is critical for a good financial health and also leading a happy life. But it takes some time for all of us to realize the importance and to start effectively and consciously start managing our personal finances. Personally, for me, it took a few years into a working career and a few job changes to actually realize and take action to consciously start managing my personal finances as well. So in this video, I'm going to share some of my experiences and some of the financial concepts which are basic and fundamental and which I believe are critical for someone who is serious about managing their personal finances. So let's begin. One fundamental change which we need to make if we are serious about managing our personal finances is we need to understand and start managing our personal finances the way companies manage their finances. Let me repeat. We need to start managing our personal finances like that of companies. Let me tell you why. The private enterprise has over 1,000 years history. And what has happened in this 1,000 years history is that measures or parameters have been developed which are effective actually and which are well accepted parameters to measure the performance of one company, compare the performance of one company against another company, and also improve the performance of a company over the years. The good news is those same financial parameters which have been developed to actually measure the performance of companies and improve their financial performance over the years can also be used to manage our personal finances. And of course, there are various financial parameters which have been developed over the years, but in this video, we are going to discuss 5 basic and very critical financial parameters which are used to measure the performance of companies, and the 3 financial statements into which these 5 parameters are captured and used to actually measure, compare, and improve the financial performance of companies. Now, what are those 5 parameters? The first parameter is what is known as income. Income is rather self-explanatory and is the revenue or the source of money for a company, which could also be sale of products. It could be for the services provided by the company or various other business which the company engages in to generate revenue for the company. So that is captured under income. The second parameter is what is known as expenses. Expenses is nothing but all the costs which are incurred by the company to generate those income. It could be salaries. It could also be for various ongoing expenses or purchase of equipments, or it could also be for interest if the company borrows money to actually run their business. So all those various costs which are involved or which are incurred in running the business are captured under expenses. Now these 2 parameters, income and expenses, are finally captured in what is known as the profit and loss statement of a company. So what does the profit and loss statement do? So the profit and loss statement captures the income or the total income of the company as well as the total expenses of the company over a certain period, which could be a month, a quarter, or even a year. So at the end of that quarter or at the end of that year or that month, what it gives is it gives you the difference between total income and total expenses, which is income minus expenses, which is nothing but the profit of the company for that period. So what does the P&L or the profit and loss statement does? So it tells us what is the profit or what is the profitability of the company and how profitable the company is being managed to generate more and more profit. The third parameter is what is known as assets. Assets could be land, it could be a building, it could be an equipment, or these are various resources which are owned by the company which help the company to generate revenue or income on an ongoing basis. The fourth parameter is what is known as liabilities. Liabilities are future payables of the company. It could be a loan, it could be some vendor payments, or various other payments which the company has committed to pay in the future. Just like income and expenses are captured in the profit and loss statement of the company, the assets and liabilities of a company are captured in what is known as the balance sheet of the company. So what does the balance sheet of a company tell us? The balance sheet of a company tells us the assets and the liabilities of the company, which means the financial strength or the financial position of the company. It tells you what assets the company owns and what are the future liabilities or future payables of the company. And in case of emergency, how strong or how well is the company equipped to meet those emergency payments which might arise in the future. The fifth key parameter we need to discuss here is what is known as cash flows. To make a clarification here, cash flows is not the same as income, and cash flows is not necessarily equal to income, which is because in India, what we follow is what is known as accrual base of accounting rather than a cash flow based accounting, which that simply means we recognize an income in a profit and loss statement as and when that income is earned and not when that actual payment is received or that actual cash is received, which is a technical detail or a accounting detail which we won't go into detail in this video, but there are lots of other YouTube videos where you can get into details of accrual based accounting versus cash flow based accounting. But what is important to learn from here is a company might be profitable or it might have lots of income, but it could also go bankrupt because the company doesn't have cash. Because history is replete with the examples of many profitable companies which has gone kaput because of lack of cash. Because the company might have income which it can receive in the near future, but as of today, if they are not able to meet their urgent or critical payments like salaries or bank repayments, the company can actually be declared bankrupt, although it is still very profitable. So we have 5 financial parameters and 3 financial statements which are used to capture the performance of companies and improve their financial performance. Let's now see how we can use these 5 parameters and these 3 financial statements to actually manage and improve the management of our personal finances. Let's start with the first financial statement, which is the profit and loss statement. Just like the profit and loss statement captures the income and expenses of a company and tells us the profitability of a company, our personal profit and loss statement can capture our income as well as our expenses. For a personal finance, income could be salary, which is the most common and the most basic form of income. It could also be fee if you are actually providing certain services. It could also be a rental income if we own certain real estate. Or it could be interest if you're investing in bonds or actually generating some interest income. And likewise. Similarly, our expenses could be for necessities like food, clothing, or rent. Or it could be for various other luxuries that we engage in. So, just like the profit and loss statement of the company, our personal profit and loss statement can tell us what our income is and what our expenses is for a certain period, whether it could be a month, a quarter, or even a year. And at the end of that, what we will get is our total income and our total expenses. And just like we calculated profit as total income minus total expenses, our total income minus total expenses will tell us what our savings is. This is very critical because our savings could be negative if we are actually spending more than what we earn by borrowing from others, or it could be zero because if we are spending whatever we earn, or it could be positive and it could be huge if you are able to manage our expenses and actually save some money for other investments or for buying certain assets. So the profit and loss statement of the company, which captures our income and expenses, would be very critical to understand what our various sources of income are and how we can increase our income, as well as how we can effectively manage our expenses so that we can actually improve our savings over the years. Because the more saving we have, the more we have cash or money to actually buy assets, make investment, and actually grow our personal finance or our personal wealth. Now coming to the balance sheet. Just like the balance sheet of a company can tell us what are the assets and liabilities of the company and what is the financial strength of the company, our personal balance sheet will capture what our assets are and what our liabilities are. It will give a clear picture of what are the assets we own. It could be a business, it could be some real estate assets, or it could be some investments. As well as it will also clearly capture our liabilities, which could be a loan or various other payments in the future which we have committed to. And at the end of, or at a particular point in time, our personal balance sheet will tell us what is the difference between our assets and liabilities, which is what is known as net worth. Assets minus liabilities equal to net worth. If you look at various news articles which comes in all these magazines, which ranks the top 10 billionaires or top 100 billionaires in the world or even in India, you will see the term which is used there or the parameter which is used there is net worth. It's not income, it's not assets, but it's net worth, which is assets minus liabilities. So our personal balance sheet will also tell us what our net worth is. Do we have a negative net worth? Do we have a zero net worth? Or do we have a positive net worth? So by seeing what kind of assets we own and how we can improve our asset column, and also how we can manage and effectively control our liabilities so that we can have a positive net worth, and how we can grow that net worth over the years through using our savings to actually create more assets rather than liabilities. Lastly, the cash flow statement or the cash flow pattern of our personal finance will tell us how we are managing our cash to improve our finances. Whether we are using our income all for expenses, or we are using it to generate assets, or we are using it to actually generate more liabilities for ourselves. So there are different cash flow patterns, and they also explain why the poor get poorer and the rich actually get richer. And since this deserves a separate video, we are going to discuss those different cash flow patterns in a separate video. I'll actually put up a link as and when that video is ready. So let's quickly recap. We have now discussed 5 key financial parameters and 3 financial statements which are used to manage and improve the financial performance of companies. And as we have discussed, these same 5 financial parameters and 3 financial statements could be used to manage and also improve our personal finances as well. Our profit and loss statement, which captures our income and our expenses, will tell us our potential for saving. And by effectively managing and trying to grow our income and managing our expenses, which we'll discuss in detail in other videos, we can actually improve our savings or potential for savings, and also use those savings and cash flows to actually improve our investments and assets and grow our wealth. Secondly, our balance sheet or our personal balance sheet will tell us our assets and liabilities, and also tell us what kind of assets and liabilities we have. And also over the years, we should be able to manage our assets and liabilities to actually improve our net worth and grow our net worth over the years. Lastly, our cash flow pattern will tell us whether we are effectively managing our cash to grow our finances. And as I've already mentioned, we'll be discussing in a separate video the various cash flow patterns of the poor, maybe the middle class and the rich, and how each of them manage their cash flows, and why we need to choose or manage our cash flow pattern so that we ensure that we are managing our cash flows to actually grow our wealth. So if you like this video or if you find it helpful, please do consider subscribing to this channel, because we are going to upload regular videos on personal finance. Do like this video as well, and do consider commenting your feedback below so that I can also find ways to improve my future videos or cover topics which could be of interest to you. And do hit the notification button so that you will get an update the next time I upload a similar video on personal finance. So that's all from me for today. Thank you so much for watching. Have a good day and good night.